Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, everyone, here we are about 15 minutes after market close on Thursday, August 19th. We're going to take our daily look at SoFi. And I was going to pop in and start talking about the chart, but I had clicked over to the news tab and saw relatively recently this afternoon, I hadn't caught it before, I guess before noon, SoFi sued over by SEC over conflicts of interest in proprietary ETFs. So I said, what the what? So I clicked on it, brought me over here, Yahoo Finance repurposing a Bloomberg article, and it's pretty short and sweet here, but they sued the robo-advisor, SoFi Wealth, for failing to disclose conflicts of interest when the money manager transferred client assets from third-party exchange-traded funds into two new investment vehicles sponsored by its parent company. They transferred the assets of about 20,000 clients in April 2019, so over 2 years ago, without informing them the company preferred its ETF over competitors and used the assets to help market and add liquidity to the new funds, according to a statement today, from the SEC. SoFi moved client assets without properly taking into account the tax consequences for its clients, according to the SEC. I have since deleted it from this tab, so I won't go look it back up, but there's something about them having refunded some folks, maybe it was all of them, for tax implications, because they're talking about not accounting for the tax consequences here, that they had issued some refunds in order to sort of offset or cover that. So anyway, I flipped over, and this is it on the SEC site. Basically, you see it has today's date on it, and scroll to the bottom here, and you can just punch this in. It's a pretty short URL if you want to look at this for yourself. But we scroll down here, we can see that the deal is $300,000 if I can find it. My goodness. Come on, Daniel. Respondent shall, within 10 days of the entry of this order, pay a civil money penalty in the amount of $300,000 to the SEC for transfer to the general fund. This is actually quite funny to me that in this public disclosure they include this here's how you can submit your payment kind of thing. That's neither here nor there, but it's just funny to me that that's included in that. But anyway, I've spent some time in my career in wearing various compliance type hats in different types of companies, none specifically in the fintech space, but this looks to me like it's kind of this doesn't look to me like it's a super big deal. This doesn't look to me like it's a big egregious error. It kind of looks like it's more of like a potentially a common-ish slip up that happens, and yeah, certainly a less than ideal situation. We don't necessarily need news items coming out that people could construe as being negative, after all that that SoFi stock has been through, at least. But to me, this looks like this probably happens relatively with some frequency, and that's they did take steps to remedy it when it happened over 2 years ago, and so I don't think that this is a big deal. Hopefully the market doesn't react to it as though it's a huge deal, but again, like I've said with earnings, if it does react to it as though it's a big deal, then what are you going to do about it? Just because you don't think something is a big deal doesn't mean that the marketplace will agree with you, and you just have to go with whatever the marketplace is sort of doing. So, but yeah, that's my 2 cents on it. It looks like it was a robo situation. I don't know, how much of that was a robot doing its robot thing and or humans influencing it in any way, shape, or form. But like I said, it looks like at the time they had issued refunds in order to cover those folks' tax implications, and but obviously this made its way to the eyes of the SEC They've levied this fine, and hopefully we can just sort of move on. But just wanted to start with that while we're here. And I guess while we're here, we'll do it this way today. We'll do different things in different ways, and then we'll look at the chart after this. So this way, any folks that have been super disgruntled about looking at charts can watch the first part of the video and jet for the second part of the video. Short interest that we've been tracking, so continues to tick up today. Ortex is estimating a little over 20% short interest increase, that is. So we are inching closer to that 10% threshold, at which point I start to really take notice and think that the short interest could start to skew the landscape of the price of the stock, could start to infuse some distortion quality to the stock, obviously in the bearish sense, and certainly adjusts the nexus point at which supply and demand are perceived and acted upon in the public-facing marketplace anyway. And so we'll keep an eye on it. We're just about 2.5% away from that threshold. But again, the threshold is a threshold, and that's just sort of like the point at which I start to really kind of take it into account. But we're getting close, and we've been making meaningful increases day to day. So we'll see, if this sort of plays out next week and gets into double digits, or if they peel back for whatever reason, and just keep an eye on it and go from there. But on the other side of things, the institutional holdings at this point, NASDAQ is reporting nearly 40% institutional ownership. So again, if you go back just 2 weeks, we were in the low single digits. So quite a big change here. So we'll see what that brings in the long run. I mean, I know these are daily videos, and so these videos fluctuate rapidly along with the stock, meaning things can look like they're moving in a positive direction one day or over the course of a few days and then dramatically change and so on and so forth. And that's just the nature of watching anything day by day. That's why I don't really like to day trade, because sitting there watching things minute by minute by minute can be just really crazy making. And so even making a video day to day can sometimes be a little crazy making, because there's good things that happen, there's bad things that happen, there's positive sentiments and there's negative sentiment, and there's macro forces that come into play. And it's a lot to factor in from day to day. But taking the longer look at things, to me, that's what this institutional ownership ticking up is hopefully an indication of generally some positive sentiment looking into the future. Now, I don't know that will prevent us from dropping significantly further, anything approaching the IPO price, for example, or the SPAC IPO price. But, like I said, those are short-term, day-to-day type things. To me, the institutional situation is a longer term. Like if you're an investor, right? People have left comments below who are clearly investors, long-term investors in SoFi. They're bought into the vision of the company, and they think that this could be something special in the long run. And they have been popping into the comments here and there when we've had big red days and sort of saying, I don't mind this if you take the long view and you think that this is worth X, Y, or Z in 5, 10, 15 years, then, this is... You probably won't even remember this at that point. Or if you are, you'll be like, oh man, remember that crazy beginning that we had. But, obviously we will be here to see how it plays out, and you never know. I'm sure institutions have bought many a thing at many a high price that has then fallen quite significantly. So in yesterday's video, when we had this nice up day, I had sort of said, keep your risk in order. Don't get overly excited from one green day. And so today we see ourselves peeling back again, almost 3%. And so this is just the nature of the beast. We've always seen, or at least since that lockup expired, that initial lockup at the end of June, we've seen consistently green days coming in very, I was going to say very unexpectedly, but not really unexpectedly. It's just very infrequently is the right word. This is another issue with making videos day to day. I don't necessarily feel that my speech gets better. I feel like it becomes harder to find words. But anyway, the infrequency with which we've had green days, especially since that run up to the merger, and especially since that first big lockup passed, we know by now that it's been followed by slews of down days, which is evidenced very clearly by this daily chart, right? These very brief green blips that then gets surrounded by red candles. And so that was why yesterday I said, don't get overly excited. Still keep your risk in order. We're still dealing with this bearish crossover. We'll see if it has any capability of tapering, which today it's continued to extend. So that appears to not be the case at the moment. It is pinning itself for now to resistance at this like 1410, 1411 zone. So we'll see if it can stay there, if it's going to fall closer to that 1305 next support level that we have charted. But I did want to go back in here to the 5-day and take a look at this. Now on the MACD, something I want to sort of draw attention to, we do see here since yesterday, right, we do see the MACD consistently losing its bullish momentum. It's just making a bunch of lower highs and now is well below the baseline. So it may be sort of in a position where it could reverse trend, but this is just to take note as you're watching these things throughout the day, or just in the MACD chart, even on the daily or something like that. Just be very aware of when things are clearly losing steam and peeling off, making a bunch of lower highs. Even as the price is stabilized, you see the price was pretty stable here, but the MACD, if you watch this versus what the price action is doing, price action keeps trying to sort of top out at the same spot, but it's just consistently moving lower and lower and lower. And so then we see this subsequent pretty big drop off there toward the end of the day. Now, obviously, we're dealing with macro forces as well, like I had mentioned. On the QQQ here, I do want to give my 2 cents for whatever it's worth. And if we flip over to the daily here, here's what I'm looking at. Now, the extent to which we have a five-wave move up here, this being 1, 2, 3, 4, 5, and now that we're starting to come down, what I would be looking for on the retracement levels, if this is actually going to come down, I don't know that it is, but the first catch level would be this 355. Okay, so that'd be the first thing I'd be looking to see what it does there. Now, if it falls through, I personally would be looking for potentially a dip buy around this 346 level, and then probably cashing out, because what I would be looking for it to potentially do is come down, bounce off of that level, briefly make a bullish run up to that 355 level, and then come back down. And if it can't bounce off that 346 again on a retest, looking for it to come down nearer to this mid 330s to mid 320s. I know it's a big $10 range, but the price of the QQQ is in the 300s, so it's not like it's a huge percent. And so, if it is going to peel back to me, this is what it could look like: 1, 2, 3. Okay, and then we could start to look to move up again. But that's what I'm on the lookout for. Obviously, the MACD still showing a lot of bearish pressure here. So we see it making some lower lows and some lower highs from yesterday to today, and still continuing to come down. So even though today looks as though we might have recovered a little bit, I'm choosing to be a bit cautious because of these other indicators and what I'm seeing now. If we pull in the MAs here, it is bumping in between the 20 and the 50. So the degree to which the 50 could catch it and provide enough support to bring it back, that could certainly happen. Again, this is what I'm looking for if it peels off. But if it peels off, that first level that the QQQ is going to test is 355. If we don't get down there, then this retracement to me isn't underway, and that's certainly also very, very possible. Sorry if I didn't mention this. QQQ tracks the NASDAQ, so that's what that is pegged to. Okay, so back to SoFi, but that's just to say the extent to which that could happen would obviously have ramifications in several stocks, SoFi being one of those. SoFi is part of the NASDAQ, you see here. And So, if overall there's bearish sentiment in the market, it will certainly put pressure on individual stocks as well. We have to anticipate that. Now, the question is always, a stock like this, which has been beaten down so much, does it actually have sort of less room to fall than the overall market? I mean, in SoFi's case, because it's so new on the market, at least from the ticker change, potentially not. I mean, we certainly saw today as the NASDAQ had a green day, this came down quite a bit. But, we would just have to see what happens when we get there, or if it's even going to retrace at this point. So that's what I'm looking for SoFi at the moment. Can we actually, get above this 1411? Right now, we're still stuck in this bearish drawdown from the MACD. 1305 is the next level down to my mind. MAs are still providing resistance up above the price action. And as you see today, that's 1411 zone that we had charted acted very clearly as resistance, right? That's where it topped out the entire first half of the day, and then it came down. And, it caught itself relatively well, meaning it at least didn't bottom out further than this wick had extended previously. Now, it did end the day on a couple of lower lows, so there's that, but, there's many things that can be flipped and changed from day to day. That's why holding stocks overnight, if you're trading them short term, can be kind of challenging because you don't know what's going to happen overnight. But we'll see what tomorrow brings. But that's sort of my 2 cents on the QQQ. That's my 2 cents on the fine from the SEC, and this is what I think that the shorter term chart looks like as well. All right, well, I hope you had a good trading day. I certainly appreciate you watching, and I hope that you finish the week strong tomorrow and have a great weekend. But before that weekend hits, tomorrow, I will see you in the next video.